Hello, everyone. Welcome back to the G22 Report. I am your host, Johnnie Market. You all know that drill. Smash that like button, subscribe if you haven't. Obviously, remember the disclaimers below. This is not to be construed as financial investment advice. These are just my opinions, thoughts on the markets. Read more below. And if you do listen regularly or whatnot, do like it. It does help the algorithms and everything. And anyway, let's get into today's stuff. Basically, not a good day for assets in general. If you look at it, we'll start with let's start with news first, and then I'll get into the markets. Uh, I always start in with that. So, first off, where is it? Oh, here it is. This is one thing that I think is coming soon is the banking crisis. Federal Reserve unveils its proponents to lower bank capital requirements, which, yeah, they're doing everything they can to, because this banking, there's so many, the auto loans, the credit card bubbles, housing, commercial real estate, and private credit, obviously, which I think private credit is just an extension of all that, all those types of loans. And there's sovereign debt, treasury, there's a couple more. And look at this. Under the proposal, largest banks would see capital fall. So you can see they are not well capitalized. So yeah, that's what it is they don't want these banks to have to go bankrupt soon. So they're lowering the requirements to say, see, they meet standards, they meet expectations. So uh, that's what I think they're doing. So they want to bring traditional lending such as mortgage origination, servicing, and business lending back into the regulated bank system. For years, those have migrated out of the banking system. So yeah, they're lowering their requirements and do everything they can. What's up is down and down is up and everything else. And this one thing I've said on this channel real quick, top spirits in the US by revenue, and you can tell this is Cordell's, this is down 3.2%. Cocktails ready to drink, those are up 16%. And makers, that's down 9%. Tequila, mezcal, I don't drink tequila. I like a margarita, but I don't. So, but that's down. And then Grey Goose, that's vodka, that's down. So if you actually look at it, oh, it says whiskey. Are Americans drinking less like they say? If you look at it here, I think they're drinking less because it costs too much. And what's the easiest, like when you go out to dinner, what's the easiest thing to cut out? Cut out drinks. Because drinks, cocktails now are like $18. You cut that out. Let's say you go with your wife or if you're a woman listening, a husband, it's $32 you're cutting right out of the bill. And those drinks do run up the bill. So that's the first thing to cut out. And then, then you cut out dessert. Then you cut out dessert and then appetizer. I'm just saying because a lot of people like an appetizer before. But sometimes they cut out the appetizer because then that's more expensive than the dessert. And I think that's one reason restaurant revenue's fallen is because before people used to go out and they would get an appetizer, some drinks, and the meal, and maybe even dessert. And what's the first thing they cut off? They cut out the drinks, and they said, "All right, we'll just get." And then the appetizers like $15 now. So now they're cutting out the appetizers and they're just getting the two entrees. And so that's what they're doing. And I even got like I went out to dinner last night. I got a root beer and it was like $4, 4 or 5. It was absurd. It used to be like $1 or $2. So, but yeah, this is why I think the easiest thing to cut out of someone's budget is alcohol, and that's what I think they're doing. So, and you can tell by the canned cocktails because canned cocktails, that's 4 drinks, $11. That's not a bad deal. You have them at home, so that makes sense. Next thing, news thing, gas prices are just a start. Consumers will feel more pain, and this is Yahoo Finance. And I mean, they say inflation and supply shortages will hit consumers. I don't think that's immediate because they're pulling out all the tricks, like they're unsanctioning Venezuelan oil. Now that's effectively U.S. oil, and they're trying to get that to market. They've lifted sanctions from Russia to get their oil to market, and then they're even unsanctioning Iran, which is ironic, because they're out of war, but they're allowing Iran to get all this money. But you can see we're headed for recessions, and consumers are expected to pull back spending as the war causes pain at the gas pump. Oxford economics, well, not that they're great. I love what they say. Higher tax refunds were expected, but now the rising gasolines are more than offsetting that boost. Which, yeah, it's funny. It's literally going straight. The consumer refunds literally going straight to the gas tank. And where I got gas, I mean, I actually found a Wawa near, so it's cheap. I found it cheaper. But I used to use this Upside app to get cash back, and there was one right near me. And I was like, all right, this isn't, the gas before the war. I was like, it's not that expensive. And I'm getting money back from Upside. But now the gas is up a lot. I went searching, but where I used to get gas, it's a full $1 more now. So you can see this war, which I mean, because it's not America's decision and bribery, blackmail, stuff beyond the scope of this channel. It will continue. So inflation will. The thing is, eventually, demand destruction is going to occur, and you see it with even restaurants. You see. Let me see if I can put this fast. And you see it. I think it'll be on a much. Look at this. Several major fast food and fast casual chains are closing hundreds of locations. Wendy's, Pizza Hut, Papa John's, Jack in the Box. So you can see there's demand destruction. Why? Because fast food has raised its prices. Why it raised their prices? It's because they're dumb. But I will say this, despite, not being all that great or whatever, this is why McDonald's will always exist. McDonald's is launching a McValue 2.0 menus, items priced $3 less, 4-piece chicken McNuggets, sausage biscuits, $4 breakfast bundle. So yeah, that's what they're doing, and they're trying. I mean, I think they should just lower prices across the board instead of having these McValue things. I think they should just lower prices. That would actually get more people into, and that would undercut their competition. But I even saw Amazon grocery store where I used to live. I was there because I had to pick up some things. That's even out of business. So you can see demand destruction. So I think when oil goes 150, that's the demand destruction. So, but McDonald's and then, um, And then there was one other. Look at this Popeyes. They introduced $5 fast to combat inflation. Three-piece chicken tenders or other items for $5. So you can tell this is why Popeyes and McDonald's, no matter what, they still exist. It's not the great. Well, to put it mildly, it's not. Look at this. The return of $6 big bucks. So you can tell they're not, obviously not the best food or the healthiest or whatnot, but they know the consumer, and they're, at least unlike a lot of places, they are they're trying to create foot traffic. So, and that's the smart thing to do. Let's see. And one of the other things is I talk about how one of the reasons America is doing horribly, it's because the actual successful people are actually idiots. And to give you a good example, Wall Street, these are successful people, priced in a swift bombing campaign. So they thought this Iran thing would be quick and over with. They actually believed the hype. A lot of the upper middle class elite, and that couldn't be further from the truth. This is going to be a complete disaster. It was stupid. We should have never gone in. In fact, if you ask me, we should pull all our bases out of the Middle East, every single one of them, all our soldiers, everything. But that's not going to happen. So, look at this. They priced in a swift U.S. bombing campaign. And this is why I think oil's not at 150. Now, I think reality is starting. And this is why I think the market hasn't really crashed yet. I think reality is going to start. Iran remains defined. Yeah, they've been preparing this for years. Uh, so yeah, and now they have the best drone technology in the world. So this is uh, so look at this. Reconcilable was once thought of a compressed time and limited consequences. Like seriously, how dumb can they be? So anyway, I think 150 or whatnot over time. And then I think it would be sort of like '08. I think, is coming. So that's, but to show markets completely getting it wrong. So see the next thing in the, oh, okay. So, all right. So we'll go here. Let's go in the market. So as you can see, this is what I said. I think, well, I'm not going to go to the Dow. I'll go to the S&P. But if you look at the S&P 500, I think this is sort of my cycles update. Is if you look at it, one day it was down 100 points, the S&P. On a 5-day, it is down 1.9%. 1 month at 5.8. 6 months, 2.3. Year to date, it's down 4.9. Yearly, it's still 4%. But if you look at all, 3,000 is probably when I'm going to start buying again. I think we'll get back to around the 2020 lows. If you look at it, up to 4,700, then it went down to 34. A, B, C. Wave. Wait, 1, 2, 3, 4. Fifth wave. So that is off the 2020 lows. 1, 2, 3, 4. And third wave is the biggest. That's the fifth wave. Yeah, so it's probably going to come. I think over time it's going to get back down to, somewhere between 3,500, and I'll probably be looking for stuff like McDonald's, Coca-Cola. I haven't even gotten up to, but the stock market has not been doing well, and I think that will continue. There'll be relief rallies. I think there'll be a relief rally soon, but if you look at oil, let's go to crude. Funny thing is, a couple of days ago, I wanted to short the stock market, but I'm not good with options. But I wish I did do that, but that's Bitcoin, not crude. Where is so I'm gonna go. I have to go here. I forgot the whole crude oil. That's gone up on a 1 day. It's up 2.8%. 5 days, it's down actually 0.4%. 1 month up 47%. You can tell in March it's been the then the reason why I think Trump keeps claiming victory, the war is over, and so I think the markets they're dumb enough to believe him. So that's what's confusing. They'll probably claim victory, and then all of a sudden Iran attacks. He claims victory down, and that's probably what happens. But I mean, nothing goes straight up in a line. Like if you look at it, it just went from February 26th to March 9th. It went from 64 to $94. Then it went to 83. This is just WTI's back to. So if you look at it, it's going to go up more, in my opinion. It's still in an uptrend. I think 125 is probably when I might be having some stop losses, and 150 is probably when I'm going to have some tight stop losses. And who knows? But the reason why I think if you look at, let me see, this is just the oil service ETF. If you look at the oil stocks, they were down 5%. Sometimes they trade with the stock market, but on a 5 day, they're up 4.2. And this is despite oil being down for the week. And on 1 month, 0.66, but on 6 months, 52. Now, I do think there was value buying. I think this was value buying up in February because it was just so cheap. But I think the reason the stocks, they're up, but they're not like oil. And I think that's because they're pricing an end to the war. I think as this drags on, I think the idea of higher for longer oil prices is going to go more and more, and they're going to start realizing those profits. They're going to realize that oil companies selling this at 100, 110, this is going to be the norm. It's not going to be. So I think the oil stocks are going to play some catch up, in my opinion. So we'll see what happens. Gold and silver, this is why I took profits locked in. I still have a position. I'm not all that worried. And if it's still down a lot by the end of the year, I could easily take some tax selling. So that's not even a bad thing. But actually, my cost base is so low, I'm probably not going to be able to. But gold and silver, as I say, right now it's down 158. Silver got smacked. My personal thing is when gold goes to around 3,000, I might buy a little bit of physical gold, or I might start nibbling in. When silver gets to 50, I'll probably start buying some physical. And I'll start buying, and then as it keeps getting lower and lower, I'm going to keep buying. I mean, it might be the same dollar amount, but it'll be more physical silver and gold. So right now it's only 492. So I think, I thought this was going to be a couple of years, but maybe this correction might be this year. I do think gold is going to go up a lot more over the next 10 to 12 years, but this is, it's gone up a lot. See if I can get silver. Like, if you look at silver, it's due for a correction. This chart was, I just want to do all to put it in perspective, but if you look at it, that was just an upswing chart. Generally, when you see a chart like that, you start selling. That's what I did. That's what I said. Even a 5-year, I do think 50 will be strong. That's going to be the level support. But I did the math on silver, and if it's similar to the 2011 top, the price would be $28.90 because it was like a 70% correction. So it'd be like $28.90. My question is, if it does become 2011, we'll just base there for another, because if you look at it, 2011, that was the top, 13, 14, 15. It basically based there from 2000 for 5 or 6 years, and then it stayed below 30, and it was around 18 for another 3 to 4. It did have that COVID spike, but then it based somewhere between 20 and 18, 30 and not even 18, but that's for 4 or 5 years. So it's the thing about precious metals is they can. And if you look at gold, if it's similar, I'm just going to do it on my phone real quick. From 1900, 1920 to almost 1,000. So I'm just going to see. It's 920, so 1920. So that's about 47%. So if you look at it, 2632. See, anywhere similar, it would 2,900 would be the bottom. But yeah, I can see. I think anything below 3,800 for physical metals is going to be a big buying opportunity. So my targets for super cheap is silver's around 60 and 60 and below, and for gold it is around 38 or 3,900. Start just easing your way in. So that's my opinion. That's what I'll be doing. Remember, nothing should be construed as financial investment advice. Just my opinions, thoughts on the markets. Thank you for listening. I will see you next week.